Have you ever felt the market whisper your name? Well, yesterday, while my coffee was still pretending to be hot, XRP kind of shot to a 4-month high, and I swear that the chart kind of winked at me. So I leaned a little bit closer. The way that you kind of lean towards a friend who's about to kind of spill tea that no one else should hear. And the candles practically shouted, "Buddy, strap in." So here's the scene, right? Now I'm scrolling through Sam Wisdom Raphael's write-up. Yeah, here's the one from the July 14th, and my jaw kind of finds the floor faster than a meme coin finds resistance. Analysts Ali Martinez didn't just share any chart. He kind of flashed a 7-year symmetrical triangle that finally gave way like a rusty garden gate. So picture 2018 to 2025 as one long pressure cooker, ticking, 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 then boom. That was November last year, a 7x pop. Now since then, a little sideways shuffle, sure, but now price, it was poking up towards $3, back in early July. Kind of like a kid daring the school fire alarm. But here is the thing. Martinez says that if XRP closes a weekly candle above $3, well, that breakout is tattoo ink permanent. And $6 isn't just pie in the sky. It's actually the next stop on the metro. Right? Now, Fibonacci levels, they line up like a runway lights at $5.96, $8.96, and $16.17. And if you squint all the way to the horizon, it's $26.24. These are pretty wild numbers, but Fibonacci's that kind of math nerd that actually never misses the rehearsal. And get this, Bitcoin just painted a fresh all-time high, $122,600 at the point of recording. Love it or hate it, when the big dog sprints, every altcoin on the block starts chasing the very same frisbee. Now, liquidity, of course, it sloshes in, dominoes fall, and suddenly people who swore that they'd never touch anything under $1 are smashing buy buttons harder than an arcade joystick. But before I go full caffeine-fueled storyteller here, here's a quick reminder, right? The link to our free educational Discord server is chilling in the description. You can hop in, you can say hi, you can roast my dad jokes, whatever really is your fancy. It's kind of where I post chart scribbles before they kind of wind up on the screen here. And oh, yes, if you're kind of hunting for low trading fees, I'm kind of partial to Kraken Pro. The affiliate link is also down in the description. It keeps this channel's lights on and my cat gourmet nibbled, or kibble I should say. All right. Back to the the breakout kind of saga. Imagine that you've been holding a beach ball underwater, right? And for 7, maybe summers straight, right? Your arms, they start to shake, the veins are popping, and your neighbor thinks that you've joined some weird, at least aquatic kind of cult. And it is then the one morning that you kind of let go and whoosh, right? That ball skyrockets upwards like it's late for a flight. Now, that's XRP at the point of recording, although there's occasional pullback should be expected, right? 7 years of sideways tension, compressing energy the way that coal, becomes diamonds. But let's just hit pause here for a second, because you might be thinking, well, should I go all in? And that's kind of a gambler talk then, isn't it, right? And it's fair enough, the kind of article itself quotes multiple analysts who admit the phrase "go all in." It sounds reckless if you ignore all of the context. Now, Ali's whole point is the kind of macro zoom out perspective, right? And on a weekly time frame, the technical picture looks, dare I say, serene, right? Big triangle, clear breakout, textbook retest. It's the difference between staring at street puddles and kind of lifting your gaze to see the entire coastline. Still, charts alone, that doesn't pay the rent, right? Fundamentals have to hum in harmony, or at least not croak. So let's run a mini checklist straight from the article, right? Partnerships drum, right? Ripple shaking hands with BNY, exploring RLUSD adoption, fishing for a national charter or bank charter, and of course, a FedMaster account. Now that's a bureaucratic kind of quest longer than any kind of Legend of Zelda side mission. And if you've played that game, you know that that gets pretty crazy. But if they do pull this off, liquidity taps might actually switch from drips to full-on fire hose. And what about XRP futures ETFs? Well, you've got ProShares, Turtle Capital, Volatility Shares, 3 outfits queuing up for products this month. When Wall Street builds toll roads, well, traffic tends to follow. Historical flex then, right? From November 2024 to January of 2025, XRP ripped nearly 600%. Now, the market rewarded kind of patience, a bit like a grandma handing out cookies, and some holders are still kind of brushing crumbs off of their ledgers. Now, here is the juicy contradiction that I always promised, right? While analysts yell explosive upside, they also warn that previous gains are no guarantee, right? It kind of makes your brain kind of tilt right or left, depending on how you want to do it. But that kind of tension in itself, kind of hope wrestles caution. It is exactly why markets stay so fascinating. Now, of course, speaking of, tussles, let's kind of talk about the $3 line in the sand, right? We just got rejected from it at the point of recording, and you got to picture a kind of, boulder balanced on a bit of a cliff. One gentle nudge and gravity does what the rest of the work for you, right? If XRP's weekly close, above $3, well, momentum traders kind of will pile in, right? Algorithms will wake up and suddenly grandma's cookie stash looks tiny compared to all of the inflows. But if price kind of flirts and then rejects like we just recently saw, then, well, we could actually see holders doing that awkward kind of walk of shame back to the mid $2. Risk lives on both edges of every single coin, literally and metaphorically. Now, before I kind of wander any further, here is that mandatory reality check. And yeah, I'm reading this verbatim because, well, the rules matter. And this one, it might just shock you, but I'm not a financial advisor, and nothing in this video is financial advice, right? Cryptocurrencies, they are highly volatile, and you could lose all of the money that you invest. It's important that you always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are going to be liable for any losses. So this video today is for entertainment and educational purposes only. So there you go. That's the legal gremlins all fed. Now, let's kind of pick up where we left off, which is the Fibonacci extension levels, right? If you've ever used those kind of paper fortune tellers in the kind of grade school, then you know fold, fold, open flap, and reveal, right? You're marrying a pop star, it might say, right? Fibonacci basically is the grown-up version of this, except it kind of conjures price targets instead of just playground gossip. Now, right now, the 1.272 level whispers $5.96. Now, that's nearly double today's current high, and 1.411 taps the $8.96. The golden ratio of 1.618 hums at $16.17, and the long shot is the 2.618 lights up at $26.24. Now, these are not guaranteed stamps. They're just milestones on a potential treasure map. And of course, speaking of treasure maps, remember our hypothetical kind of beach ball astronaut earlier? Well, Bitcoin's new all-time high is a rising tide that could lift all balls even further, right? Liquidity rotates a bit like tourists chasing warmer beaches. First BTC, then Ethereum, and then the alt army. Now, the article makes it pretty clear that momentum's contagious, and just like you can't smell one bakery without kind of craving the carbs, you can't watch Bitcoin print records without side-eyeing, I should say, all of those altcoins. And yet there is some nuance here, right? The article mentions several market watchers already favoring XRP this cycle before Ali's thread. Now that means that sentiment's been quietly building, right? Like thunderheads staking, behind the hills while, everyone is still kind of snapping sunny selfies. Add Ripple's corporate push, BNY partnerships, RL, USD lobbying, and you kind of get a fundamental tailwind underneath the technical wings. But momentum is a fickle DJ, right? One skipped beat and the dance floor is going to empty. So if $3 rejects harder than we've currently seen, then, stall kind of meets shin. It's not pretty. And that is why risk management isn't just a buzz phrase. It is your seatbelt on this journey. So even if historical triangles look like a SpaceX launchpad, you still need to check the weather, right? Okay, so here's a quick tangent, and I promise it'll be quick. Yesterday, inside our free Discord, yep, the same link that's in the description, a member asked if the Fibonacci numbers mean XRP must march through each checkpoint, sequentially. And the answer is no, right? Markets are very messy, right? Similar to how you might skip a kind of playlist track because you're sick of it, right? Prices can leapfrog levels when liquidity bursts. Conversely, it can also set up camp under resistances for weeks, munching on marshmallows. Patience, it isn't really going to be optional here. It's going to be the oxygen that we all have to breathe. Now, I promise some anecdotes as I always do in these videos, so picture 2018 Nick, wide-eyed, dusting off his first hardware wallet. XRP was my wild teenage crush back then. Full of promise, occasionally even ghosting me, but always kind of sliding back into the DMs with a cryptic "I miss you." Now, seasoned traders, they told me triangles were, neutral patterns. Neutral, kind of my kind of left sock, of course. 7-year triangles are the stuff of Greek myths, I think. Now, of course, there's faces of sirens that are going off everywhere as we kind of face these weekly candles. But if you fast forward to November of 2024 and everyone's kind of yelling about kind of election fatigue, yet XRP quietly multiplied sevenfold. Now, I was on vacation, at least half-heartedly, I guess, photographing sunsets because I'm not a photographer, when my phone buzzed harder than a bee on my espresso, right? I checked the charts, almost dropped the gelato, and, sold a slither just to cover the trip. Held the rest. Now, 2 months later, 600% gains. Moral of the story is that sometimes the loudest narratives, they hide under a whisper. And that is why Ali's obsession, observation, however you want to kind of articulate it, kind of hit me, because he's not just chanting Moon Boy slogans, he's just zooming out, right, and paying attention to the chart. Now, we as humans, we kind of stink at the zooming out, right? We zoom in on our phone screens, right? We zoom in on the drama, we zoom in on the red candles, right? Even those tiny little ones, right? But if we were to widen our lens and, we could actually potentially see these patterns emerging, whether triangles, the Fibonacci arcs, human psychology, but on parade. All right, let's switch gears here just a little bit and talk about the risk-reward math, right? Because I guess courtesy of the article's vibe here is that suppose price confirms above, $3 and you're now going to be targeting $6. Now that's 100% upside from the breakout, right? Well, you position size accordingly here. So if you kind of risk a 25% pullback to previous supports, that's $2.25. Well, that's a ratio of 4 to 1. That's not too bad, not too shabby at all, right? Push targets to $8.96 or to $16.17, and the risk reward balloons like a kid blowing bubblegum at least until it snaps in their face. Now, for the record here, a risk-reward ratio of 1.5 is usually what I target within my trades. Anything above 1.5 is definitely going to be stacking in my favor, which basically means for every $1 of risk, you're going to earn $1.50 back if your trade goes in your favor, right? Now, ideally, you want something, above 3. Personally, I use 1.5. If you can get above 3, well, you can lose 70% of your trades and still come out a winner overall. And that is math. That isn't even just kind of speculation. It's just pure mathematics. And so if we were to focus on these things and actually start to use risk-reward ratios and risk management properly, we can actually end up in a pretty decent area. And yet, risk is married to probability, and probability, it hates arrogance, which brings us back to Bitcoin, right? At $122,600 BTC kind of gets greed dials to relatively high. It also raises volatility. A sudden 15% BTC retrace can smack alts like a backhand from Thor. So position sizes, keep them sensible. And maybe keep dry powder for dips, right? Nobody ever kind of complained about having spare ammo when the arcade boss levels up. Okay, here's a quick pit stop, Kraken Pro. Now I rotate my limit orders there because the fee structure doesn't null at my ankles. And yes, the link below is an affiliate link. Clicking it does help support the channel at no cost to yourself. Transparency over cloak and dagger always. All right, let's get back to the analyst realm then, right? Because the article hinted that some people argue prioritizing XRP over other assets this particular run. And here's the spicy kind of metaphor, right? Imagine that you're at a buffet with plates labeled BTC, Ethereum, and XRP. Everyone's kind of crowding the BTC carving station. Folks are flashing like kind of paparazzi, and the ETH table's got a queue too, but XRP's chef just kind of pulled the foil off a sizzling roast. Nobody's even smelled coming, right? Now, do you elbow past the herd and grab a seat at the quieter feast, that might actually grow, rowdy in 5 minutes? It's the decision time. Now, let's address the elephant wearing a green visor, regulations, right? Ripple's, still kind of sparring with regulators over bank charters and RLUSD scrutiny. If they nail those, well, doorways will open. If regulators slam them shut, well, price action could fumble. So no, I'm not telling you to remortgage Granny's little cottage, right? I'm telling you to watch the scoreboard and make your kind of sneakers, or at least keep your sneakers tied, right? Your decision at the end of the day. You got to do what you feel best, and always do your own research and consult a qualified professional before you make any decisions. All right, story time again, because, well, apparently, according to the comments, you don't like these, but I'm going to keep them coming because I believe you actually secretly do. Now, once back in early 2022, I ignored a weekly breakout on an alt because I convinced myself the macro headwinds were just too much. That coin tripled while I napped. The lesson burned. Ignoring clear breakouts because of armchair macro theories is kind of like declining free pizza because the cheese might be greasy. At least taste a single slice. Let's pivot to sentiment. Social media is a double-edged megaphone. When Ali Martinez tweets, "hard not to go all in," excitement spikes, but so does, contrarian kind of pushback, right? Some call it hopium, others will call it conviction. I call it a spicy popcorn, movie. Now, the healthiest stance, well, is to respect the market, yet doubt your own certainty. Now, that kind of balance keeps you from FOMOing in at the tops or panic selling at the bottoms. Now, remember the article's note on whale concentration? Well, only 4% of holders boast 10,000 XRP or more. Now, that stat wasn't in today's piece, but it kind of that kind of rarity kind of mindset fits a little bit here, because ownership distribution shapes supply shocks. If masses join too late, well, scarcity bites, which again ties back to triangles and of course breakouts. Now, we're closing in here on the narrative climax. XRP poised near $3 resistance right now. Well, actually just got rejected from it. Now, it's the kind of breath holding point, right? Just before a potential high dive. Will it stick the landing or will it belly flop, right? The weekly candle won't necessarily lie, but meanwhile, we've got Bitcoin printing new highs, right? Channels are buzzing and altcoin rotations glow like carnival lights after dusk. But taking a step back, what does all of this mean for people like you and me? Well, opportunity married to uncertainty, right? Now, at least it is married to uncertainty. So that's kind of investing in a bit of a nutshell, right? You've got the Fibonacci checkpoints. They're kind of road signs, not destiny. And your steering wheel remains in your own hands. So here's a quick kind of recap of actionables, right? Straight from the article's implications and of course framed in my own personal kind of checklist, right? Set alerts at the $3 weekly close, the $5.96 and the $8.96. You've got to watch news on the RLUSD adoption and BNY partnership progress. Monitor ETF launches, ProShares, Turtle and even volatility shares, right? Liquidity, events often reorder order books pretty fast. Then you got to track Bitcoin's pullbacks, right? Altcoin rallies can stall if King Corn sneezes, which it has had a pullback from 122k to 118k. Then you got to manage position sizes, right? Celebrate the wins, survive the losses. And if any of this feels overwhelming, then you know where the community hangs out. Click the Discord link, hop into our general channel, or lurk or just chat. Knowledge shared is ultimately risk halved. All right, let's coast towards some reflection here, right? 7 years of triangle compression teaches us patience. November's 7x burst reminds us that markets can reward the stubborn. Today's $3 flirtation is the kind of latest chapter, but not the whole book. Whether XRP rockets to $6 next month or kind of Miranda's, the critical takeaway here is clear. Zoom out, respect the structure, question the hype, but never ignore, the chart when the waves, at least when it kind of waves a flare gun. And I'll keep streaming my thoughts in that Discord. I'll be, tracking orders on Kraken Pro. The affiliate link, full disclosure, keeps my coffee feud alive, and update, your next candle, right? Then, and until then, remember, right? Charts show potential. You control the execution. So hit that subscribe button so you don't miss the next candle that changes everything, and hit that video that's queued up on the screen right now.